Hi there, welcome to the market update on the 13th of October. And look, this is just a diabolical market. That's all there is to it. It is unbelievable what's going on out there in so many stocks, just dripping lower day after day after day. So really, I find it quite an untradeable market right now. We just need to see those bond yields in the US. We need to see a reversal. Until then, the market is in a very bad state. And it's really a matter of holding on to the ones you really like. And there'll be a moment to step up when momentum turns, but be very wary out there while it just remains in this state, trying to find where is the high end yields going to be. This is a US 10-year bond yield chart. It has broken out of the range it's been in for the past year. We've been following it along. It's been a really sharp move in yields from near zero, heading up towards 5%, well above the last cycle high a few years ago. So it's getting into rarefied air here, and it is starting to cause problems. There's no doubt about that. So really, it's a matter of waiting and trying to get through to the other side of this. And boy, it is tough trading conditions. There's no doubt about that. So let's just have a quick look. I want to make it really simple what I'm looking at in the S&P 500 now that it's looking the way it is. I just want to let you know what I'm sort of waiting to see. I want to keep this, pretty basic, just so I'm not confusing people. I know it can get all a bit involved. So this is the S&P 500, the correction over the last year. And what I look for is, the midpoint, point of control, being a very important area that the market often oscillates around. So it's like a gravitational pull for the market. Getting back to that midpoint. So I often expect to see prices revisiting the midpoint over and over, as you see there. And often once it breaks through a midpoint, it can oscillate and really turn and go to the other side of the range. So that's really the main thing that I look out for. And it's at the moment this really difficult market to analyze. Having to come out every week and predict what's going to go on. I mean, it is slightly absurd, right? We're not here trying to predict the future. I'm really just trying to say, what are the odds at this moment in time? Where could it go to? Where would I want to take part profit? And then see what happens. So I'm not trying to predict the future. I'm trying to say the odds are high here that it might revisit the midpoint, for example, the point of control, and that can be a trade. If you can capture a move to the midpoint, that means that's where you can take part profit. And if it collapses, you'll still make lots of money, and if it turns back up, you'll get out without a loss. So that's really a trader mentality. I hope you do take what I say most of the time as really just pointing out odds rather than saying this is going to happen or that's definitely going to happen. That's really not what I want to be doing. It's just the markets are far too difficult to be able to predict every step of the way. So really what I'm looking at here is this correction over the last year in the S&P 500. And what I've been saying is that we've had the rally over the last year up into where I expected to see selling pressure. Now we have seen selling pressure. So I have pretty much been correct in the call to say, watch out in this area around 4,600. And over the last few months, we've seen a correction in prices. It has sold off, but it's sold off to the 200-day moving average. So this is where I'm now able to sort of have these lines in the sand, I guess. So the way I'd analyze this market is just to say that right now if prices turn down below the 200-day moving average and that point of control, which is the midpoint of the correction over the last year, below there, watch out. It can sell off quite rapidly to the buy zone of that area, right? So the setup at the moment is that while it holds above the 200-day moving average, I'm allowing this. It can actually rally. And look, if it busts out, that's where I really change my tune. Above the whole high of the move from the last few months, it's going to be looking different, and especially above the all-time high. So it's just lines in the sand for me that aren't far away from the current price action, where I can sort of change my tune. You know, up through here, up above 47, 4,800. I'm going to have to. I can't be remain bearish, very bearish. And below the 200-day and that point of control, I can increase my bearishness, saying watch out. So while we're in this area above the 200-day moving average, I'm just saying, okay, well, let's see. I think there should be lots of selling pressure up here. So I have told you in the past, these waves, as they develop, often you have retracements sort of into the sell zone of the wave, the previous wave, midpoint or sell zone. So you've got that wave down from August, and then where did it rally to? We had a rally all the way up to the 75% retracement. So 75 to 87% retracement of that previous wave. That's where the selling pressure should be. And there it was, bang. And we've got another wave to the downside. So that's why I'm just looking at this wave. And if, this is what we're saying, if the thing is turning down, you know, the wave structure will be something like this. Go hit support, go to resistance. And if the selling pressure is there, then it'll have the next wave. And if it breaks below the low, it's going to start looking like a little downtrend, isn't it? So this is why what's happening right now, this rally, I think, is a dangerous rally to participate in, because I think there should be selling pressure up around that 4,500 region. But until prices break below the 200-day moving average, I have to be, you know, sort of in that in-between area where I'm bearish, but I'm not crazily so. I'm able to see the, I guess, devil's advocate of what could happen here, which is, you know, prices are holding above the 200-day moving average, aren't they? And in an uptrend, often the 200-day will be support, and this looks like a little uptrend sort of developing. So, you know, this is a tough moment to be making really big calls. So I need to see it below that 200-day. And below there, though, really, you've got to be wary that this thing could really tip over. And that's why I'm preparing, you know, my people in Retirement Trader. We've put on a hedge. We do have still some long stocks, but we're not trading much because it's a pretty tricky environment, and especially in our small cap stocks, which is, it really is a bloodbath, and it's at that capitulation phase. People just get me out at any price. It is tough going out there. There's no doubt about that. So once those yields turn back down, you know, there should be a softening, and we possibly will get a nice little bounce. There's going to be some great opportunities, but boy, at the moment it is really tough going out there. So we've had a bit of a bullish move in gold recently on the back of the problems in the Middle East and, you know, oil taking off, flight to safety. But I do need to see a bit more data before I can get too bullish on gold right here. You can see we've got the, you know, multi-year rally. We've had the big corrective phase over the last few years, and that's still playing out, but that gives us a few good lines in the sand on gold. We've got the uptrend in place. So it is actually in long-term uptrend. See that 10-month exponential, but is above the 20-month simple. But, you know, when you're in a sideways market, those moving averages, you can't be buying or selling at moving average crossover. That's far too simplistic. But just to know that the momentum is actually currently up in gold. So it's possibly just coming back to support and getting ready for that next phase higher. But the fact is that we've had that triple top over the last few years, monthly sell pivot there, another big monthly down bar there. So it's in the short term still marching down. So I really do need to see something like a monthly buy pivot from here. Something like that. Next month, closing above that 10-month exponential, that will look pretty good to say, right, gold is actually starting to look like it's ready to turn up. Because the way it is, big picture, and we've had this rally from $1,600 odd up to what, over 2,000. So we're looking at that range. As long as it holds above that low, big picture can actually still be looking all right. So we can still see more downside here before gold is ready to turn back up. And that could take months to play out as interest rates top out, et cetera, et cetera. So there's no guarantee that where it's bouncing from now is the low, and there's no sign yet that it has turned back up. Now, it definitely can turn back up from here. It's at the point of control right now. Had good buying support back to there. So it's looking constructive, but it's just not enough for me to now start saying, get on board. Let's get long gold right now. It's constructive, but short term, the downside momentum is actually still there and hasn't been negated just yet. So really, that brings us to our market, the ASX 200, which is nothing other than a dog's breakfast. This is the last few years. Seriously, what a schmozzle it is. It's just stuck and cannot move. It needs to break out of the range it's in. This is the last year's trading to really give us any sign of what it wants to do. I am currently of the view that down is a risk because it is still below that high of the correction from a year ago. So it is, even though it's been holding in there, the big picture is that there's the high. It's rallied into selling pressure. As I've told you, that sell zone area is where the selling pressure usually is. And look, it's just bouncing around between the sell zone and the midpoint of that whole wave from last year. And boy, it's just stuck. And we've just got to say, right, until it breaks out, not too much of a view, but I am wary that when it breaks below those lows, it should have a sharp move to the downside. And the way the US is looking just has me of that view. But when does that happen? This is why this market is just quite untradeable at the moment. It's one to be left alone if you aren't needing to do anything, or just sit back and wait for this to all unfold. And sure enough, at some point it's going to give us some opportunities. But right now, they are few and far between, and that is just how it is. All right, well, I'll leave it there. As you can sense, I'm pretty sick to death of it at the moment, and just hoping the things start to get moving at some point soon. All right, cheers. I'll talk to you next week.